So let me welcome on board K Venkataraman, the MD at Titan Company, joining in the show right now. Venkat, hi, good morning. Good to have you on the show. Well, your Q4 performance, Venkat, as I look at it, was good, even discounting the fact of last year's lockdown. How are the demand trends that you are foreseeing now for the first quarter FY22, given the localized lockdowns and what's happening in each and every state?
Not really making any assessment of that, honestly, at the moment, because it's way too dynamic for us to, really assess and do anything about. So we just, in fact, putting safety of our people before business. We closed the Bangalore stores 4 or 5 days before the government brought in the lockdown, and we've totally empowered our regional heads to actually go ahead and shut cities, ahead of the curve in a sense. So we are at the moment not at all looking at what is likely to be the sale in Q1, and we're waiting it out, maybe take a view on it end of May when things really actually stabilize.
Yeah, I completely understand. It's a very fluid and dynamic situation in that sense. But tell me, besides Bangalore, how many stores across the country are operational as of now?
I don't have actually a count because we are totally empowered. I remember yesterday, Joy on the jewelry division was talking about roughly 50% of the stores, I think, were working in the jewelry business as of yesterday, if I recollect right. But that is just a recollection. And it's not a metric. We are, all our conversations at the moment are about the safety of people and not about how many stores are open.
Yeah, absolutely. I understand, priorities have changed this time around. But tell me, when I talk about the business, the low studded ratio, higher contribution of plain gold coin, and the loss from the custom duty, which impacted your EBIT margins in the fourth quarter, do you see this continuing in FY22 as well, given the consumer sentiment and that it's all over the place?
Actually, the studded share has to be seen in the context of the total sales. See, when we grow 60% in sales, that was the growth for the jewelry business. In fact, the jewelry business grew more. The company grew at 60%. When you're growing at that level, even if the studded business grows 25% and the gold business is growing at 65%, the studded ratio drops. But that's not actually a material thing as long as you keep growing the total gross margin of the business. Our problem was more the management of many of the other parts, which is, the business mix, for example, more jewelry sales, less watch sales, more coin sales, less studded sales. They're all the parts which delivered a certain lower gross margin growth compared to the sales growth. Some of the things that we have to control, we actually deliberately let the sales growth happen in FY21 without really wanting to fix it because our emphasis was sales growth, market share gain, competitive advantage improvement, and all that we have achieved. And into FY22, those controllable factors will not, go out of control. We will make sure that we maintain those and extract as much value as we need. So we're not worried about going forward the impact of most of those.
If I look at the fourth quarter, Venkat, your jewelry revenue stood at about 6,422 crore rupees. Help me understand how much of that was pent-up wedding jewelry sales demand. Because I'm just trying to assess, in the first quarter, you wouldn't have the wedding season.
See, actually, if you look at the Q3 sales growth was pretty decent. So while to some extent there was pent-up, but if I remove the effect of the last fortnight of March 20 from the base and just look at 5 fortnights starting from 1st January 20 to 15th of March 20 versus 1st January 21 to 15th March 21, that growth was upwards of 40%. And our wedding share is nowhere of that, like Ajay was mentioning on the call yesterday, that some of the big jewelry companies, jewelers, have 50% share of wedding. We are not in that league. So therefore, whatever was the pent-up demand, which it would be very difficult to, actually determine that because nobody has a date which was locked in May and then say that actually we postponed it to February for us to catch that. But you're right to the extent that some of it would have got shifted, but nothing to the extent of contributing so much to the 40 plus growth that we saw. So it is greater interest in the jewelry category because of share of wallet shifting, greater spend in the wedding because other avenues of expenditure like the celebration itself is muted. You're not hiring big halls or five-star hotels. You're not catering to 2,000 people and so many other bells and whistles that you do at weddings. In the celebration, you're not doing. So some of that is certainly going to wedding jewelry. And that will continue because for the next 1 year or maybe more, you're not going to celebrate the weddings that the manner in which we used to celebrate. And of course, the store of value aspect of the category is benefiting because we're all sitting at home and not spending on other discretionary categories, including dining out, including, calling people to our homes, including spending on other discretionary products in our lives. So some of that is coming also into jewelry because jewelry is a store of value and people feel good putting their money into jewelry. So I don't see the delayed effect of weddings in Q4 as one big impact on the growth that we had.
Mr. Venkataraman, if you correlate the behavior pattern to what we're seeing in terms of the prices of gold, how has that trend been as well? I mean, historically, when we see that sharp inflation and a cooling off, we normally see consumers prepone buys. Is that similar to what you're seeing this time around, or what are some of the trends suggesting?
So typically, price volatility of gold is what keeps consumers anxious, not actually a rising price of gold, because a rising price of gold is typically seen by consumers as a positive thing because gold is also an asset class and therefore they are confident that the money that they put in is going to be worth more and is continuing to be worth more. But if it keeps oscillating in a very short time, that's when people are worried that, look, I bought yesterday and 3 days later it fell and there is a notional feeling of notional loss, and that spooks people and they don't come in. But that settles after a while if the price starts either being stable or continues to rise. We don't see people holding back. So this is something that we used to. I've been used to this from 2005. There are some blips and then there is a steady kind of demand once price either settles or continues to keep rising over a certain line.
Okay. And on the jewelry segment, the watches segment, if we could talk about that. Flat revenue growth, margins a little lower this time around. Just talk to us about some of the factors at play here and what the outlook is when it comes to the watches segment.
Yeah, the watches division has got two parts to it. One is the main business, which we are well known for, which is the watches, what we call the watches business. And the other one is where we are a recent entrant, which is the wearables business. The watches business obviously is upwards of 95% of contribution to this division, and the wearables business, we're just beginning. And as far as the watches business is concerned, obviously, given the nature of the category, it was the most challenging situation in FY21 because people were all sitting at home. They had the mobile phones. They were looking into their laptops. Like even when I'm speaking to you, I know that it is 9:56 a.m. And therefore, the need for a watch as a timekeeping device was not there. And because we were not dressing up so much sitting at home, the need for a watch as an accessory was also not there. We were not, the socializing was at its lowest in many, many years, forever, one could say. And till that socializing remained depressed, the intrinsic demand for a product like watches, which is the most discretionary in our company's portfolio, was a challenge. But I must say that despite that intrinsic disadvantage, the recovery rate for the retail businesses of watches in Q4 was higher than our own estimate, pretty close to 100%, and we were quite, satisfied with that. The wearables business is a different thing. It's been driven in the last 4 or 5 years by substantial activity in that category, by substantial interest in people wanting the office assistant on their wrist, people wanting health and fitness on their wrist, and of course, due to the COVID-related complications of even SpO2 and temperature and all that, the role of the wearable has become much more, and the wearable market is looking for an continuing explosive growth. The Titan company, like I said, was a late entrant into this, only in the last 5 odd years. And we also realized that the capabilities that are required to make a mark in this, we didn't have. And we went about acquiring that capability in 2019, and we've had it for a little more than a year. We acquired a company called Hug Innovations, which is based in Hyderabad, and it's now a part of Titan. And those are the tech team of the wearables business. And starting the second half of calendar 2021, we certainly expect to make a much bigger play in the wearables business and go towards taking our rightful place in that category as well. Overall, the confidence and belief in the watches as an accessory, as opposed to a timekeeping device, it's always been that belief. But the continuing belief, there is a large number of people who want to wear a watch, and we have done extensive research on this, who want to wear a watch as an accessory to match their mood, match their clothes, wear it for the right kind of occasion, whether it is in office or at home or, socializing. That opportunity is very, very large, and it's growing, and we're going to be pushing that as well. But the wearables business, because of the size of it for the industry as well as for the company, will have a very different growth trajectory, and we are very bullish on that as well.
Good to hear that, Venkat, and thank you so much for taking the time out. Hope you, everyone else in your family and the Titan family stay safe.
Thank you very much. All the very best to you as well. Thank you. Stay safe.